Hi there, how are you doing? I've changed around my apartment a little bit, so now you can see this beautiful painting behind me, which is made by my grandfather, who was a restorer of classical paintings. And well, it's a self-portrait of Frans Hals. It's a copy of it, of course, and but made at the original size. When my grandfather was asked to do that for somebody, he made, I believe, 4 or 5 exactly the same paintings, and in different, let's say, first a test, and then several, and one went to the original went to the Rijksmuseum in Amsterdam, and one copy or 2 copies went to the people that owned the painting, and he kept 2 of them himself, of which one is finished, and that's the one behind me. You can see it's his style, but that's a little bit about what you see behind me. But there's an interesting news item about high-frequency trading. High-frequency trading is, of course, well, the sports of the big banks in order to influence prices on the stock market and steal from normal human traders, slower traders, and also basically take a cut and maximize the margin of all trades. You used to have the fact that if you want to trade a stock that you have to pay a quarter or something like that to do the transaction, but now the price is a part of the margin because of the high frequency trading. These machines can observe what happens in the market, respond to it really quickly, so that if somebody makes, let's say, a pension fund decides to buy a specific stock, it's known, and these machines, they become active, they buy the stock at a little bit, let's say at the current price, so and put a little bit on the price and then sell it to the pension funds. It's front running basically, but all kinds of other other tricks can be done, because simply the looking glass or the window through which you look at the market is not real. It's the artificial window that you see after high frequency trading has done its thing with it. So you can think that the prices are going up and bid higher, and then it's because of the algorithms that are flashing higher prices and not actually buying or offering higher blah blah. It's quite interesting topic. And now there's a news item that says, well, it can actually be hacked in a way, and I think there's many ways you could hack these systems or impede them. But one very clear way is by hacking, by jamming the GPS signal. Because what happens, of course, is that you have machines that do these trades really fast, and if they're actual trades, if they're not naked, so basically if they're not saying, okay, we offer on sale stock XYZ, and they don't really have it, because they're gonna retract the offer very quickly, but they were only offering it in order to give somebody in the market the illusion that there's lots of these stocks on offer, so they should offer a lower price for it. So basically they're pushing down the price. If that's not going on, if they're actually trying to resolve a trade, then you need more time than a nanosecond. And basically these trades are all batched in data sets, and they're transported around the world. Why? Well, because everybody around the world that you want to participate in this high frequency trading market has to be able to see the game, because it's a game. It's all more or less artificial. It has no relationship with the stock itself. It has a relationship with sentiment in the market that you can exploit, that you can cut a margin of. But anyway, so you have to transport that data. So you get a batch of information with Sally bought stock A, Jack bought stock B from Sally, and at price is Y, X, Y, Z. You get that box and you have to order it, and in order to order it you need a timestamp, which is a nanosecond timestamp apparently. And one of the impartial, coincidental, but very reliable sources of those nanosecond timestamps are GPS satellites. Because how does GPS work? Well, basically you have a little device, a radio, with which you listen to these satellites. You try to get a signal from a couple of them, but they all have a clock inside them that is synchronized. They all emit the same time at the same time, but they're actually, because they're in different locations, that signal arrives with delays, and if you do a triangulation of those delays, or you do some kind of algorithm of it, then then you can figure out that one signal traveled longer than the other, so one satellite is further away than the other one, and so I'm in a certain position. So those delays between these time stamps of the different satellites can be used to resolve your position. And if you have 3 satellites or 4 or 5 satellites, signal gets better and better. And of course, if you and it even gets, and then there's still there's actually an artificial error in that time signal. But if you have a fixed location that you determine the position of in a different way, so basically you determine the location relative to the GPS original, let's say 0 meridian and 0 latitude and altitude, etc. Then you can make the signal very, very accurate, which is important for cruise missiles and stuff like that. The GPS system was built for the military and then opened up for civilian use with an error of about 100 meters or 30 meters or 9 meters or a few centimeters. You can figure that out for yourself. It depends on what type of radio you have. I expect that these banks have very, very sensitive antennas because those satellites have to radiate the signal over a wide area, and that takes a lot of energy, so the signal will not be very strong. And well, but it's a radio signal. It's you can go to the same frequency and jam it. If you let's say if you have a 1.5 volt battery, you can probably emit and you stand right next to your antenna. You can completely blind it, like you have a flashlight. You try to look at a candle at a kilometer distance in the night, and it's pitch dark, and you can see it, and then somebody steps up in front of you with a flashlight. Say, hey, can you still see the candle? No, you cannot. It's blinded out. What happens then is that the high frequency trading algorithm doesn't know what time it is anymore, you know, and so it cannot resolve the trades. It cannot, basically it cannot dish out an image of its market to other markets anymore, so the other markets can respond to it, and that completely screws up the whole game. And I guess it's interesting. There's lots of sides to this whole opportunity. There's another way to jam the system, I think, and that's simply to be an intermediary in one of the cables between high frequency markets. Why? Because those cables, you know, I wonder whether the trading signal is encrypted or not. Because if it's encrypted, then it's slow, because you need to decrypt it. So if you have a high frequency trading algorithm in Hong Kong and one in New York, then the encrypted, then if you can transmit the signal decrypted over the same distance, you'll be faster, significantly faster in terms of these type of algorithms than if you try to encrypt and decrypt it. So what you can do is use long wavelength radio, for instance, to transmit a signal from New York to Hong Kong faster than any cable with encryption, because it also has to go through routers and through all kinds of other intermediary systems, and they all take time to transmit the signal. That's why they always want to have straight cable to the market, to the servers that run the market, and they always require other traders to have at least, let's say, there's one instance that I really, they always require people that are trying to plug into the system to have at least 100 meters or something like that of even glass fiber cable in order to delay the signal that they receive, so they cannot respond faster. It's like you have basically, it's a game, it's a rigged game, and you have levels of players, and it's just a sport. It's a sport about millions, and it's interesting and fun, and you can have smart people work on the problems that are brought up by your requirements. You basically say, well, find a way to trade really fast, and you get some nerd to dive into it, and he'll have no life, but you have more money, and he'll have some of it too. Now, hundreds of millions are made every day by stealing from normal traders, normal participants in the market, using these systems by Goldman Sachs, JP Morgan. And but there's something interesting about the whole idea of being upset about spoofing the timestamps and the concept of high frequency trading. And I guess it's just like, let's say I had a friend who worked at a bank, and at Fortis Bank in Holland, and that was a big disaster when the financial crash happened. That was when she was my friend, and she was talking about normal trades being resolved, and it took months to basically resolve trades. And those are like basically people phoning up and say, I want to have shares like this and shares like that. And what basically happens is that those are written down, those are administered in the system, and then at a certain price, and then they have to be resolved. And what happened was basically, the picture I got from it was that Fortis was basically taking any differential as a risk of running the market. You could always consider that to be the case. If you make enough money, for instance, doing high frequency trading of the market, you no longer have to resolve actual trades as fast as usual or in real time, because you make so much money that you can actually pay for that. Because it's like you're playing, everybody's playing the game, and you're playing with a rigged deck, and you're making so much profit that if somebody, in the game says, well, but I won such and such money, you can say, well, in the meantime, I've won 5 times as much as you, so I don't mind. I won more. I've been defrauding you, and with the money that I've defrauded you with, I can always resolve your trade. That was going on, and so in my mind, since I talked about that with her and I thought about and read about high frequency trading, I think what's the case actually is that these high frequency trades are usually not resolved at all. They simply happen, and the response is made, but there's no impingement on actual shares. There's not going to be a change of hands of actual shares. If that would be necessary, then you would get another step, another administrative step, and so it's very artificial, the whole process, and it seems to be only functioning to create an illusion of liquidity, of a price image to the market. And then if you say, well, okay, we want to be as close as possible, and we're gonna calculate exactly where we have on Earth. So if you have a trading station in the middle of Niger, in the middle of Africa, you'll be, let's say, exactly in the right position to trade and to respond, and you get a bigger advantage. If you don't encrypt, you have a bigger advantage. If you have a straight cable, as short as possible, glass fiber, with no way stations, no repeaters, you have an advantage. And of course, if nobody is jamming your GPS signal, you can trade. It's a funny problem. How do you resolve the GPS problem? And that's a very good question, because it's about trust. It's about a unique and a uniform signal coming from the sky, which was not made for the purpose that you're using it for. And you could say, well, banks, there's so many things that can go wrong at this point, because you can observe behavior in other markets and generate artificial timestamps on your trades, so that it becomes almost impossible to resolve your trades later, except if you give you an advantage. There has to be error checking as well in these type of transmissions. There's many interesting sides to this topic, and I'll be following it. I'll keep it at this. I think that the problem is that there won't be any trust because fraud is endemic, and the whole system is a big fraudulent system, to make independent atomic clocks, for instance. So once you start hacking this system, it becomes really perilous to actually use it. And it's interesting. People that don't like these type of markets I guess any original stock trader, anybody that wants to find a company, help it develop itself by buying its shares so that it has capital, money to buy oil and fuel and energy and raw materials in order to expand its activities. Anybody that's in our economy like that will immediately say, hey, here's an opportunity to knock out a huge burden on my